All right, everybody, welcome back to another edition of Market Talks with Dr. Stoxx. This is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com, drstoxx.com. We've been in business every market day since October of 2002, if you can believe it, with our award-winning trend trade letter. We also have an ETF letter, a momentum letter, a couple of small cap letters, and two live trading rooms. And I'm coming to you today from the live options room. And if you want to join me and an amazing group of traders at all skill levels with options, from beginners to people that do it for a living and everybody in between, go to the subscribe menu, scroll down to the live options room, and you can add on our flagship live room, the live trading room, which does stocks, ETFs, and micro E-minis. You can add that on at a 40% discount. All right, so I don't have a whole lot of time today. I got a little bit of a late start here. So what I'm going to do is I want to draw out a map where I think the general indexes are going to go. And I'm going to give this as kind of a blanket statement for the S&P, the Nasdaq, the Dow. I have a little bit of a different opinion on the Dow now that I had than I had a couple of days ago. And the small cap index, the Russell 2000. And I'm just going to say this as kind of a blanket statement. If you're really looking for alpha outperformance in the market, I don't think, and I could be totally wrong about this, but I don't think you're going to get that from the indexes. So we use index trades all the time. We use the micro E-minis. We use like a TQQQ, the 3X bull for the Nasdaq. We use SPXL. We use TNA and a variety of other leveraged instruments to outperform the market with the major indexes. But right now, they're not set up to do much in the way that they haven't been doing already, which is just a lot of churn sideways. So trading ranges all over the map. Here is your set of highs for the S&P. Here is your set of lows. And we're just kind of looking at a three-month window, right? 2.5, 3-month window. So if we project that forward over the next 2 to 3 months, let's just do it for even 1 month. Or a month and a half, then that's probably where we'll be by the time we get out to April, right? The 1st of April, we'll probably still be somewhere in this band, with the support lows being very well established, the resistance highs being very, very well established, and we're probably just going to see the market punch back and forth, up and down off of those levels. Now, I could be wrong. A breakout to the upside would be bullish. A breakout down to the downside would be bearish. And I do think that March is going to be a pretty weak month overall for the market, but I do think we're going to get a bit of a rally, which may be starting today into the end of February. So my map for the S&P looks something like this, up to near the resistance highs. And then March is pretty much of a churn, slow, choppy, couple of days up, couple of days down, but mostly down, to test the resistance lows, maybe 6,800. Maybe we break through just to scare everybody out, 6,700. Then at that point, I think from April to May, get into the summer, and especially toward the end of the year, we should see a much better trending market to the upside. The market needs to factor in and needs to price in and needs to fully understand, get more clarity on the whole AI, CapEx, data center, hyperscaler unclarity that it's facing right now. We just don't know. All this money being spent on these big data centers and all the infrastructure and everything and the energy that goes with it. And we just don't know what kind of return those guys are going to get. So the market is uncertain, which is why we have a trading range. That will change, but I don't think it's going to change anytime real soon. So again, my map is a little bit of a bullish bounce into the end of this month, a bearish slide lower that will probably be pretty slow. We'll have some nice bounces along the way in March. And then by the time we get to early April, we should be in a much better place. Same story for the Nasdaq, although the range is wider, right? And that's because it is a more volatile index in part, and also because it is primarily a tech index, and it's, 40% of the Nasdaq is the top 7 MAG stocks, because it's a weighted index. So just those 7 stocks, 7% of the companies in the fund are weighted to 40% of the entire amount. So if they're not doing very well, they've been underperforming as a group. I don't think that's going to change anytime real soon. Then you're not going to see the Nasdaq start trending higher, and it could even get a little bit lower. But my map for the Nasdaq is pretty much the same thing. A bit of a bounce, might even be weaker than the S&P, and then the next move in March should be down to test the lows. This is 24,270. I'm not sure what that equates to in the QQQ, but it could be 580, maybe 575. That was 575 is kind of my low mark for the first half of this year, and then a better bounce once we get some clarity. Now, if we don't get clarity by the time we get out to April or May, we're still going to see trading range going on. I don't think there's anything systemic in the economy. We've been getting pretty good economic data, and jobs are still okay. Jobless claims are still at a pretty decent level. CPI came in on the cooler side today, and that helps push the Fed to maybe 3 cuts this coming year in 26, maybe more. Probably not more, but 3 is pretty good, and really no signs of recession. So it's the economy itself is doing fine. Retail is still strong, and the consumer's outspending, and the sentiment is still pretty good. We just need to get this big investment in this new technology, a bit better clarity on it, so that we know how we can evaluate these companies. We just can't do that right now. So small cap index is much better, healthier, but I do think that let me get rid of those drawings, because I think how should I call this? The operative trend line is that one right there, and we're underneath it now. And once you get underneath a dominant trend line, you start looking for bearish patterns, right? On top of that trend line, you look for bullish patterns. Down below it, you look for bearish patterns. And of course, the market can totally give you a revision and do whatever it wants. But as far as I'm concerned with the small cap index, yes, I do think it's probably going to outperform as the rest of the market is falling, because small caps are going to benefit from the Fed, and they don't have the big CapEx problem, and they don't have the big AI problem for the most part. And there's a huge variety of industries in the Russell 2000, and a lot of those industries are doing really well, right, with a lot of good clarity and a lot of growth. So the small cap index is if you want to put your money into any index, the small cap index is probably where you want to go. I'm just thinking that instead of a little bounce into the end of the month, my map here is maybe for a little bit more of a rollover. And then we get something a little more bullish into March. So March might be a good place to put an IWM trade, but a short or an inverse fund on the S&P and the Nasdaq. Now, one last thing to look at is the Dow. The Dow also is much stronger than the other 2 major indexes. And it is, it formed this nice little high tight base, which we played over in the live trading room. And we also had DIA calls over in the options room. It kept going up. We kept raising our stops on both those trades. And then it came back down and hit a profit stop in each position, right? That was yesterday. Big red stick day yesterday. And then a flush out again this morning. Reversal back up to test the underside of the former line of resistance, now likely resistance, right? So, I just think all 4 of these major indexes need a little time. And then when we get out to the end of the month, you're going to have to stay away from the S&P and the Nasdaq unless you want to short them. But the small caps, likely a pretty good place to be. And that might even happen sooner, right? We might even get a nice bull reversal in the next few days next week. And then the Dow Jones is also a good place to be, because there are only 2 MAGs in there, and the rest are all kinds of other industries that are rising above and trading outside of all this data center AI confusion. All right, so that's my map for the major indexes. Let's scroll down to a few sectors. So we're pretty long gold, and it's working out well for us. So we've got GLD calls in the options room. We've got SHNY shares in that's a 3x bull version of gold in the live trading room. We kind of have different time frames for those two trades, and I'm managing them a little bit differently, giving the calls a little more room, a little more time, giving the ETF a little less room and a little less time. But they're both working out well for us, and I do think gold is going to have a good. I think it's in a better place, right? It didn't get slammed as hard on the big uh, manipulated, if you want to call it that, manipulated sell-off in gold, not like silver. Silver got really slammed down to over 30% in a day, and then it went down a little further than that afterwards. Now, here's a little thing about silver that could be a little canary in the coal mine in a positive way. If we go over to the, what is this, the 30, I don't want the 30-minute chart. Let's put on the 2-hour chart and crunch it up a little bit. And if you can kind of look carefully at this, you might be seeing what I saw this morning. I posted this in our main room. Here's your bottom. Something like a inverted head and shoulders is forming. It hasn't completed yet. It hasn't confirmed, and it's not that well formed. And why do I say that? Because when you put the neckline over those pivot highs, it is sloped to the downside, and you really want to see it flat or sloped, if it's sloped at all, sloping to the upside. So this is the kind of bullish pattern that can break out and give you a nice run for a few days, and then it peters out and it rolls over, and then the whole thing collapses. So I'm not that excited yet about silver, but I do think it is at least a positive trend, and it might well be too, if I get rid of all this stuff. It might well be that the actual pattern is something that would actually be more bullish. We just haven't formed the head yet. We're still working on the head. So if we can get a neckline that looks a little more flat, right, like that, then that's possible. I don't think that's what's happening here, but it's possible that that's happening. Then we'll have something a little more bullish. But of course, you're talking about more time. So my mantra for the shiny metals is that gold is a hold, silver needs more time. So if you remember that, and then check back in with me next week, and I'll let you know. Copper's up today, but it's just not getting much traction off the lows. But I have to say the lows are holding. Let's go back to the daily chart, and it's going to look pretty much like gold and silver. It did not get as much of a slam. It has had several days of big flush outs on heavy volume, but it is in a strong uptrend still above the 50-period moving average. Yeah, I wouldn't kick anybody in the pants for putting on some MHG, which is your micro E-mini. We had some on in the other room, and I didn't manage it very well because we had some profits, and then it came right back down with one of these slams and hit our raised stop. So it was a small loss, but still, we could have taken some profits. I did not. But if you get into CPER or the mining index, COPX or MHG, I think you'll be okay. Because to me, this looks like among the metals, I wouldn't say it's the most bullish metal right now. I would put that on gold, but I think copper is set up quite nicely technically to give a decent bounce, but you got to give it some room. You got to stay below these intraday lows down here, otherwise you'll get in trouble. All right, quick look at Bitcoin is still in a bearish mode, and yeah, it's bouncing nicely today, but I don't think it's going to last. I'm not sure. It hit my target of 75,000 and it kept going down. My revised most bearish target is down here to 35K. I don't think it's going to happen anytime real soon, but that would be the target. And I did have half a mind that it would bounce nicely first, maybe up to 90K. There's a lot of resistance up there, right in that area, 85 to 90, and then roll over and head down to like 50K by April. That was my original map. Then I had to get a lot more bearish because look at all this negative volume. Sentiment is horrible. Outflows are horrible. People are, the central banks are buying gold and silver. They're not doing anything with Bitcoin. Yeah, there's some, like BlackRock is out buying Bitcoin, but really, in terms of valuing the Bitcoin compared to valuing gold and silver, not much value there yet. Now, I do think it's not going to go away. I don't think it's going to crash. It's not going to zero. And when it does start flattening out and building a base and starting to get some positive sentiment again, it's going to be a very nice trade indeed. but we're nowhere near that as far as I'm concerned. Now, I'm happy to change my mind, and I always try to be flexible with new data that comes in. I have my biases, but I cling very loosely to them because we have to let the market tell us what it's doing. And right now, it's telling us nothing really bullish yet on Bitcoin. And Ether is, to me, uh, gone. I'm not even sure it's going to come back. It's printing a a bear flag right here. I think the next leg lower is 1500, which is my original bearish target. And I tell you what, I've got a guy who does Elliott wave analysis. I'm not a fan of it at all. Actually, I tried it, studied it, didn't work for me. But he actually has a projection for Ether that puts it below zero, down in a negative number. Of course, that's not going to happen. But all that's to say that the negative technicals here, and if you map out the mathematics of the angles and all that stuff, it's not good. Not good at all. So it's just stay away from Ether. It's a wait on Bitcoin and certainly not a buy, not yet. Okay, we've talked about the metals. We talked about that. Let me drill down into a handful of sectors that are doing really well, and there are quite a few of them. And we've been trading most of these in and out. Let me just put in. So XLI is your industrial space, really good, printing a little bit of a pause up there. It's already hit the technical target we had for it. You can drill down into XLI and look at stocks like Caterpillar, Honeywell, Boeing is in there, and there's some good plays there. XLP is your staples sector. We've been in staples calls. It hit our target, took a big profit on it. We then flipped over into the UGE, which is the 2x or 3x version for the staples sector. Over in the other room, we've got shares of that now. That's doing really well, and it just doesn't seem to be slowing down. So XLP, staples, you've got Walmart, Costco, Colgate, Clorox, Procter & Gamble, your tobacco plays, they're all in there. And then the other one is the utility. So we are long XLU. If it hasn't hit our target already, it might have. But man, what a move today. Why is this happening? Well, partly it's the safe haven play. And partly the market is just looking for outperformance, and then outperformance begets more outperformance, and that's going on. But look at this breakout. So we noted this little inverted head and shoulders down here, and we put on XLU calls, or was it UTSL? No, it was XLU calls over in the options room when it was below the neckline, just because it was setting up so nicely, and it was such a nice looking chart, and it was, the value there is incredible, and it was just boom, 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 every day a bigger boom. And look at that volume coming in, crazy volume. All right, so healthcare too sector, I would say, is doing pretty well. It's just about ready to crack open to the upside. We have some of that on with the leveraged fund over in the options room, and I'm not so sure about discretionary, and I would say this is mostly Tesla and Amazon. So if you like those two stocks, buy those. Don't buy the discretionary fund. Energy, I think, is probably going to top out a little bit. It got way ahead of itself on a valuation basis. The price of oil doesn't support these kind of high levels. Big bearish engulfing candle yesterday. Heavy volume. A little bit of a back and fill today, but I think probably the next move is going to be down. And when it does get down and flattens out and gives us a buy signal, we're going to be long ERX, because I think that's going to be a nice trade, much better than the indexes through March, April, and May. Banks I would avoid for now. I don't like the bank sector. It's been hard hit. The regionals are a maybe, kind of a question mark for me, but we were in them. We had a nice trade in DPST. We took our profits, and we've been out of all banks for a while. All right, so those are the major sectors that you want to focus on. And I would have to say, again, stay away from NDX, QQQ, stay away from SPY and the related trades. Maybe small caps, maybe Dow Jones. But these sectors I just mentioned, drill down into the top 10 stocks in each of those, and you'll come up with some nice looking trades. They're not going to be the most exciting, but you don't want exciting in this market. You want profitable in this market. All right, last thing I wanted to show you, I'll do both of these here real quick. So the orange list I have here is a This orange list is a list of stocks that in black box Stoxx, which is the software I use to monitor option flow. These are stocks that are getting what's called an alpha gold alert. An alpha gold alert is I see we just got one on TSM. Thank you, El Padrino. An alpha gold alert means very unusual volume coming into a name that may not get unusual volume very often. And, they're anxious to get in and they're buying big size and they're just hammering this boom, 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 boom. So, from an options perspective, there's a lot of interest in that particular name. I put them onto this list, and sometimes they just take off like crazy, like the option players knew something was coming up. Those are always fun if you get in on one of those. Sometimes they just show up and they don't really do much of anything. I prefer to put them on a list, let them sit for a little while, and see if you can find some technical setups. So let's see how these guys are doing, and I'll let you know if I find a good one. That's a little toppy, but this one, look, this one gave an alpha gold alert down here, the beginning of that big green stick. It was 480 or so, and now it's 580. So that's a very nice alert. APLD is it's kind of like IREN. It's an energy play in the data center group, and not really a great space to be in right now, but it got an alpha gold alert a couple of days ago, and it hasn't done anything yet. So let's watch that one. XOM, this one came out of probably down in this area around 140, shot up to 156 and change, and now coming back down. As I said, the energy sector is set to cool off. This is one that you want to take profits on. Now Facebook got one, and it got one like up in here, and it down, 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 down ever since. So there's a good example of one that does not work or did not work. I'm just going to take that off my list. In fact, Core, we've got one yesterday. Hasn't done much yet, but it's a lot of fun to trade. This one works well. We've had a couple of stop outs in this one recently, so not one I really am interested in getting back into, but keep an eye on it. Amazon got one just today, down here off the real deep lows, and so that's interesting. Microsoft got one yesterday, or do I have those switched? I think Microsoft yesterday and Amazon today. I'm not sure. Intel actually has a nice setup. I do like this technical setup, and it got one. Well, they got one somewhere in here, right? And we did trade it. We did INTW, which is the leveraged version of Intel, and we had a nice move, and we shot up our stop to protect some profits, and then we got stopped out on, I think, that red bar right there. It's come back down. It's printing a reversal bar here. It's like a little bit of a mini pullback in a nice looking uptrend. The only thing I don't like about this chart, you've got this big gap down and it's bearish. You've got this big gap up and that's bullish. And now the price is somewhere in between. So to me, this is not, there's not a clear picture of where the chart wants to go. In that case, for that reason, I'm out. Now, COHR, I did some research on this one overnight and really like the fundamentals, what the CEO is doing. It's in the very strong laser tech space and fiber optics and all that kind of stuff. And it's not the best of breed in that group, but it's the one with, in my opinion, the best technical setup, and it's got some very good fundamentals as well. Good growth, good. The analysts have really big high price targets for this one, so I like this one. We actually have some shares on in the live trading room. Let's see, GFS came in, somewhere in that big green stick, and that was a nice follow through. GM came in and it did nothing, just fell. SNDK came in today on this a nice little breakout, and Riven is up on earnings. That also had one today, and I'm not sure about AMSC. I don't even remember that one. All right, real quick look at the greens list, and we'll do worst to best. OMA. So I've had OMA as shares. I got out of them finally on that red bar there, took a small loss. I've been waiting right through this little section right here. It gets up, hits the resistance. I'm thinking this is breakout day. And then it gets right back down again. And so it hit my raised stop. And again, it was a loss. But it's doing this little, what we call a scalloping pattern. Now you want to kind of see those scallops get a little higher and higher. They're getting lower and lower. But once it does break out above that resistance line, if it does, and holds it there and then follows through the next day, that should be pretty decent pop. We're in STX shares over in the other room. I like this setup. This is one of the great memory plays, and all of them have the same kind of 2-week base that they're building up here on the highs. We had a nice trade in MU calls in the options room, a nice trade on SNDK shares in the other room. And this is one that we're back in, STX, after it came down and tested and successfully held the support. This is a restaurant chain. It's just kind of banging up here on this cup and handle. CRDO is a one that where did this one come up? Oh, it's in a Tip Ranks, which is a service I subscribe to, focusing on analyst reports. And there was a really good a new analyst report just came out a couple of days ago on the company, and it looked everything I read looked really good. So keep an eye on this one. It's not really doing a whole lot, and it's not exactly in the right space, but I just have it on my greens list. I want to keep an eye on it. TREN is going nowhere fast. It kind of looks like OMA, but better. That's a biotech firm. Keep an eye on that. Here's another memory play looking a lot like the other ones, and this actually looks quite bullish here. Freedom is a fund for emerging markets, which has just been really good. I've been in this one for a couple of weeks now, and just goes up a couple of days, down a little bit the next day, up a couple of days, down a little, just edging higher slowly but surely, and that's the kind of thing you want in this market. This is the FTSE index, which is looking really good. Most Europe major indexes are strong, and this looks really good. That's a very bullish pattern, and that's ready to go. You could buy that one today. COGT have been in this one forever, like OMA, like what was the other one? Turn, just going sideways, waiting patiently. Here's a copper miner looking good today. NVT was in another one of that. Monster Beverage is doing well on the pullback. We had calls in this one. We took a small profit on it and then got out. BSX is a recovery play off of the lows. We've got some calls on this one after an Alpha Gold alert that came in yesterday, and it's been all upside gradually. But this is a slow moving, big blue chip medtech play, and we're going to hang on to that one for a while, I think. And then IREN is breaking out of a pretty good looking pullback here with a double bottom. Not yet a whole lot of volume, but I like what the stochastics and the MACD and the cycles are all doing, bottoming out and looking ready to give us a nice little pop. So we took some calls, just a little lotto play for a short-term pop trade that may happen and may not. All right, guys, I'm going to let you go. I really need to get back in the room. We'll trade the power hour together after I produce the video and put a link in the main room, both rooms. God bless. Have a great weekend, and we'll see you back in the trading room just a little bit. Bye for now.